Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you in this episode is 3 key tips to growing your account quickly and fast when it comes to trading options. So some things I want you to consider as you go ahead and continue in the world of options and look to grow account, whether you're growing a small account, large account, whatever account size you are. If you're trying to grow an account quickly, here are some tips and insight that you may want to think about. Now, I think it's very important that when you look at growing an account, you recognize that if you're trying to grow it quickly, the risks start becoming more exponential and, shall we say, problematic. So not everybody will want to grow an account quickly because there are some additional problems, not only the things you have to do, but also the stresses it may cause. So if you got like 10 kids at home, you just lost your job, you're stressed out, just a lot of other things behind you. Maybe you don't have a lot of capital and you're just worried about losing that capital. You may want to take things slower. However, if you have the right mindset and you really want to grow an account quickly, you got to put the focus into it. And that also means time dedication, something that not everybody has because you might have a job, 5 kids or whatever. So here are kind of 3 key tips to kind of get that account and growing it quickly. So tip number 1 is learn to trade extremely fast. So we're going to go over these in more detail here in a second. I just want to give you some quick points. So learn to trade fast and quick, and I'll explain to you exactly what I mean by this. And then tip number 2 is learn to be consistent in your trades. And tip number 3 is learn to manage risks. So these are the key 3 tips that we're going to be focusing in on, and I want to share these with you. And let's go to kind of tip number 1, which is learn to trade extremely fast. Now, if we're looking to trade extremely fast, it's not all just about getting in the trade in and out very quickly. Compounding your trade is, of course, nice when you're dealing with options. So if you can go in and trade like a 2-day option or a 9-day option or a 16-day option compared to let's say a 135-day option, yeah, absolutely. You're going to be way ahead of the game because when you look at theta decay, so if we look at just the time value of decay, okay, if I can trade a shorter duration option, sell option premium, you're going to be able to make money a lot faster. So let's say a 60-day option versus a 10-day option. Yeah, you'll be able to make much more money from theta and time decay because, hey, you don't have to put up a lot of capital. Your time decays quickly. However, what most people don't get is that even though the time decays fast here, your risk accelerates. So you've got the theta that you're making, but you're also increasing your price risk, and that's what people don't get. So understand that you're extremely accelerating your risk when you're trading that. So if you can trading a shorter duration, that's great because you can make some more theta, especially if you're doing spreads, that kind of thing. Trading fast. Now, trading fast can also mean compounding. So if you can do trade every single week rather than a month, yeah, you're going to compound much more because if you do it every week, you compound 4 times. Whereas if you do it a month, hey, that's a one-time compound and then 12 times a year, right? Whereas this one is just much more. The other thing with trading quickly is just being more efficient with trading fast. It's not just about going in and trading shorter durations, getting in and out of the trade fast, because you could drive yourself insane. You could trade like on a 1-minute tick, and that's just not going to keep you sane. You're going to go berserk and lose all your hair. But if you're trading quickly, also sometimes that could just mean a peace of mind of an extra 20 minutes for yourself personally. And that could be just using control keys. So here's control 1, control 2, control 3, and I can hop around to the different panels. So knowing your panel and platform when you go in and hop around to the different tabs, that's kind of pretty cool because then you can hop from one to the other to the third. So that's also one way. Or if you're building out spreads, a lot of times in my videos, what I will do is just show you the right click concept, right click, then you buy, then you go into a vertical. But what you could do is you could buy the vertical by just holding the control key. Hold, click the next one, and I've got myself a vertical build. And I could even build, a butterfly here, just like that by holding the control key and keep adding spreads on top of it. So that's also kind of interesting, but just showing little tips and tricks right here, learning more about them. These aren't the only ones, can get you a chance and opportunity to trade a little faster. Okay, so let's go into tip number 2, and that is learn to be consistent in your trades. And I'm not saying just consistent in profit, right? A lot of people are going to be thinking, okay, he means consistency in profit. No, be consistent. Be consistent meaning do the same thing kind of over and over again. Even if it's not on the same stock, at least do the same strategy. Do it in the same moving average. If you're doing it based on moving averages or breakouts, do the same thing. So if you've got, let's say, a trade here, and let's say we're doing, as an example, if I'm doing a trade on Square and I'm doing a vertical put, then what I'm going to do is every Monday, I'm going to do that same strategy. Okay, I'm going to do it over and over again. Now, if you're not doing a weekly trade, right, if maybe you're trading a little slower, well, maybe you do it every 2 weeks. So here again, maybe I'll do vertical, then again, I'll do another vertical, then again, every 2 weeks, I'll do another vertical. Again, speed and how quickly will vary from person to person. Now, if you're doing, let's just say different stocks, that's fine. You could do a Facebook vertical, and I'm just using vertical as an example. Here I could do a Square vertical. My point is I'm doing the same strategy. Here I'll do a MasterCard vertical, but I'm sticking to verticals. Be consistent. That way, if you have wins, you kind of understand where the consistency is. Or if you have losses, you at least see, hey, at least you're doing the losses consistently, so you could maybe tweak it a little bit. So do something consistently. So that's kind of important. Set up yourself up a calendar. And this will also allow you to project, like let's say from this week, okay, you're able to make, I don't know, let's say $600. Well, now you know next week, if you're doing things consistently every week, you'll probably make about $600, right? And then the week after that, you're probably looking for $600. Now, does that mean you're always going to get 600? No, you might get only 200. You might get 800 on this week. You might get 500 on this week. You know, but you're aiming and you're kind of being consistent. You're averaging about maybe at the end of the month, maybe 600. So that's kind of what you're aiming for. And that gives you the consistency. And you know, on average, you're making 600 per week or whatever number it is, depending on your account. Okay, so be consistent. And tip number 3 is learn to manage risk. I can't tell you enough. A lot of people, they just don't know how to manage the risk. And if we go into the trading account panel here and you check it out, many people, when they, again, let's just take a concept of just selling verticals. What they'll do is they go in, and I'll just do this quickly. So here is one vertical. Okay. And what they'll do is they will sell a vertical. And now let's say they've got, I don't know, X amount of dollars in here. They will go in and they will basically attempt to sell these verticals. And they say, okay, well, I've got, you know, this one cost me $365. You can see at expiration, that's the amount of margin they're taking. I could probably make about 135 right there at expiration, which is the green line. And there's my 135 for one contract. So what does that mean? Well, that means, hey, I could probably trade more contracts. So why don't I trade 10? So then they jump that up to 10, which, you know, puts them up at about $3,600 of capital. And that's about what they're willing to risk. Now, the downside with this is you've concentrated all your risk at the 230 because those are the strikes you've chosen. So there's a big problem with that. Why would you do that? Even if you've had, let's say, I don't know, 5 grand. Let's say we're putting up about 5 grand worth of capital. Here it is, 5,100. That's not really an efficient way to manage your risk. It's not a smart way to manage your risk. Why would I put everything in one spot? So what I would rather do is let's just duplicate this trade. Let's go into October 29th and let's go into a little bit of a different spread. And now what I'll do is spread this out, spread this spread out and go a couple of different durations. So now if I do 2 different expirations, you can see I've got one spread at the 230, okay, the October 22nd, and one spread at the 225. So I've got some here, I've got some here allocated. Now I could widen this out a little bit, let's say 220 and a 215. So now I've got my spreads at different points. So this way, if this starts to go against me, yeah, this spread is bad, but this one still might be okay. So you don't want to put everything in one spot because then what happens is you just need one move to go and you're done. It takes you out very quickly. So be very careful with what you're doing. Spread your risk out at different spots, at different points, so that way that market goes down or against you, and at least it's not going to take you out. And that's all about really learning to understand and manage your risk because not everybody really knows and understands how to really do that. they kind of get the basics behind it. Yeah, I'll take profits in the strength. Yeah, I'll have a stop loss. But they don't spread out their positions. They don't manage their money appropriately, because managing a $10,000 account is a lot different than a $50,000, than a $100,000, than a $1 million account. They're all a little bit different, and you got to keep spreading your money and capital across the board as you continue to grow those account sizes. Now, I hope this gives you an eye opener to really what you want to do if you're looking to grow a small account quickly. Definitely, if you're serious and interested, check out some of the live classes that we have. You can go to our website at tradersfly.com right here. And then there's a bunch of courses. Even if you want to do one-on-one coaching with me, that's also something that's available. But check out the live classes. We just did a recent one on covered calls, and we're doing some more here coming up soon. So thank you so much for joining me. I hope you got a lot out of this video, and I hope you continue to work and evolve your craft, your trading business, and improve. Thanks again, and I will see you next time.